Hello, today is June 28th, 2025. As always, we'll start with our disclaimer. We'll go over our calls and then make our predictions. Well, this is my trading plan for Monday, which is June 30th, 2025. As always, right now it's just a plan. I can change it. I can be wrong, so trade at your own risk. Friday, we look for the pattern with the early low, which is this. Monday should be the pattern with the early high. We said the commonest thing was a gap and a prompt move outside of Thursday's range, and we got that. We had some price targets, 61.32.82 and optionally 61.33.42. Because we gapped up, the price remained on the table, but not the time. Didn't mean it wouldn't print Friday, just I couldn't say when it would print. It did print within a fraction, and there is support under the price target. It's even after watching the system work for 23 years, still kind of amazes me how it can nail things like this. Of course, you have to realize it isn't going to be that accurate every single time. It's just something which is going to be that precise often, not every single time. MEJT gave a sell signal in the afternoon. That's already played out. Doesn't help us for Monday. We are going past the TDST line from 61.17.52. There's resistance here for one full bar past the line. This is it. That's one full bar past the line. If we gap up and hold it, we'll have two bars. We'll have one bar completely over this bar. And if that happens, you break through resistance. And if you break through resistance in this pattern, even though we'd be way over the upper Bollinger Band, you could have almost a parabolic move up. Doesn't have to be, but it's on the table. So if we gap up and can hold it, it's very strong. At this point, I'm not certain that's going to happen, but you never know. We completed bar 9 of a DeMark setup on the weekly chart. You don't have to pause here, but very often you will. Just one of those things which is a place to look for a pause, and the rally doesn't require it. Well, we gapped up, hit a higher high, closed under all these highs. That's not good. Now, time doesn't run out until Monday's open. So if we open and take this high out early, all is forgiven. That we don't know yet. But for right now, that's a negative pattern. And if it's maintained, which we don't know, if it's maintained, it should lead to lower prices. This really isn't the kind of action I like to see when you hit a new all-time high. I like to see it hit a new all-time high and keep going. It still may, but I'd be happier if this didn't happen. Now, you could argue this was a response to a news event, and responses to news events get reversed promptly and completely, and you could argue that's already happened. What I don't like here is this is a wall into the close, particularly at the end. It's a sign of unrestrained buying by retail customers. These people aren't always wrong, but they're often wrong. Certainly institutions aren't going to be buying with abandon late on a Friday. And when you're rallying like this on a Friday, it's hard enough to reverse it in the first place. These things tend to follow through. Now, if we keep going up, fine. This is a very bullish period of the year, one of the most bullish. We could just keep going up, overtake this, and forget every negative thing I've said. But I don't like the fact that we dropped even before the news event came out. I don't like this wall into the close. And if, and that's underlined in capital letters, if we gap down under this low, which certainly hasn't happened yet, if we gap down under this low, this whole move doesn't count, and you compute a rejection of the high and you've completed a trade or VIC 2B top, which should lead to lower prices. So we're right at resistance, and it's a question of whether resistance wins or resistance holds, and I think we'll find out early on Monday. Monday's pattern has the early high regardless of where we open. Independence Day week historically is one of the most positive weeks in the year. We're in rally mode, so any short position should be considered a counter-trend trade requiring a tight stop. Now we gapped up, hit a higher high, but closed under prior highs, and if that's maintained at the open, that's negative. It should lead to lower prices regardless of how we close. But if we gap up and maintain it, we'll have overcome strong resistance. We should continue the rally. That might not happen. We don't know yet, but that might not happen. There's a wall into the close. It's often followed by gapping down. The put-call ratio is too low. The public is buying too many calls, and this is a wall into the close, which is public buying. That's not institutional action. If we undercut Friday's low, we'll have completed a Trader Vic 2B top. It should get some follow-through. This is a bull move. We should keep going higher. It's a bullish time of the year. It wouldn't take much to just reverse this whole decline, take this high out, ideally by gapping over it, and in spite of the sentiment indicators of too many calls being purchased, in spite of the wall into the close, in spite of all that, we can take this out early, ideally by gapping over it. I sure wouldn't want to be short. I would just say we keep going up. But be aware, if that doesn't work, it could fail quite badly if we gap under this low. We gap under this low, that's a rejection of the breakout to a new high. It means resistance will have held, and we're going to drop before the rally will continue. And I'm strongly convinced it will continue, and we're going to much higher highs before the year's out. This is just one of those make or break periods where even though it's a counter trend trade, if we open down here, I don't think I'd want to be long. So it's the pattern with the early high. We'll have to see how we open, and that's today's call. Just remember, it doesn't have to gap. I mean, we don't have to gap over this. We don't have to gap under this. But if we do, it's going to be a very telling thing. And that is today's call.